Hey, greetings. Dr. Jeffrey Scott here. This is my Market MRI Pro update for Thursday, February 27th, 2025. Titled today, Another Day, Another Fade, PCE on deck. We had NVIDIA earnings. We had hoped that that would lead to upside surprise, and maybe that would lead to a rally in semis and a return to the upward momentum that we had seen. And what we got was another day that opened up a little bit and sold off throughout the day. After hours, a bunch of earnings out. ESTC up 14.9, BE up 9.7, SoundHound up 9.2. Some of the names that I'm looking at, Net Appliance down 14%, PUBM down 11.9, Duolingo down 6.9, HP down 3.6, and Dow down 1.5. So definitely we'll have mixed responses in the market on Friday. The big news, I think, on Friday has got to be the PCE. Right now, when I'm doing this at about 10:30 Eastern, futures are down, a tad. When the Nasdaq is 20,000 plus, a 63% move, 63-point move, which is what I'm looking at right now, is really not that much. I think what's most remarkable to me is when you start to look at how far off high some of the things that we watch are. You look at the major indices like the S&P, it's down 5%. Apple's down 9, Amazon's down 14, Microsoft 16, Google 19, Nvidia 22, Bitcoin down 24, Palantir down 33, Tesla down 43, MicroStrategy down 56%. So there have been big outsized moves on some of the darlings that were in the market over the last several months. Right. We look disclaimer before I start to look too much further. This is for educational purposes only. Anything I talk about should be taken in the spirit of education and not considered investment advice. As always, the intent of my videos is to demonstrate the tools that I use for top-down analysis and how I apply them. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy, sell, long, short, any stock mentioned in this report. Trading stocks and options should be considered risky, and you should consult with your financial advisor before making trades. And I have tools for multiple platforms, but consider myself an independent trader. All right, well, let's go and talk a little about Top Down Trader. If you haven't joined, why not? It's free. I don't solicit you. I don't send you spam. What you get is typically a nightly commentary of what I thought happened in the markets. You'll get a link to the video so you don't have to worry about whether I put one out or not. And you'll get invited to special programs like the recent 3.5 hour how I do top down trading with the various platforms and my favorite option trades. So go to Google Groups, enter your ID, search for top down trader, tell me how you want to be notified, and then later, within 24 hours, I'll add you to the group. For those that are members, I'm going to talk to Praveen on Friday. My expectation is I will do a video with live option on Sunday evening or late Sunday afternoon, time to be determined, to officially launch the program. I'll have pricing. And as I said last time I did a video, probably with no interest in more than 20 or 25 people to now become paid members. And then we'll shut that down for a month or 2 months. I want to see how my server holds up and whether or not we need to add server space. And then once I'm comfortable with that level, I'll open it up to the broader market. All right, so let's take a look at the stock market for Thursday. So let's start with my timing brief. If you remember the last time I did this on Tuesday night, we were talking about how we were about to flip to the third market ETF of the four I watched to turn to a sell signal. I also talked about how that's on the weekly and all the dailies are sell. So it's really much less attractive to the long side and really much less attractive than it's been to the long side for quite some time. Now, here is the weekly model. Just look at the red, this bar here. Look at how much of this run we captured. And I was complaining when I triggered a sell signal on this little close below the WMA. You know what? It was a good signal, believe it or not. Um, they're all showing sell. The only caveat is, boy, all four, not three, four of the weekly. If we were to close here, Fridays have not always been kind over the last several weeks. If we were to close lower on Friday, then we've gone to a sell across the board on the weeklies and on the dailies. I also want to point out that the 3 month new high, new lows on each of the individual indices, um, I'm not really at a point that I have to see a bounce. We could still pull back more. Clearly, the underlying stocks are worse off right now than the major ETFs, but we're not at a point like we were with these where a reversal is guaranteed. I think we're going to get one soon, but it won't be because of that indicator. If we look here at the dailies, no question, all of them are in a sell mode. So we've gone to it's a be careful market, and I certainly personally I'm careful, probably not adding new longs unless there's a story. Is it too late to short? I don't know. I've got a couple of contra ETF positions I've added over the last couple of days, sort of as insurance, but this is not a pretty picture. But again, we're going to bounce eventually. The bearish sentiment is almost as if we're at a major bottom and we're down 5%. It's quite remarkable. Let's look at the major indices and see if we see anything that we want to comment on. So spiders, I just highlight over it, tells you it's down 1.37. You can see we've clearly broken through the 50. So I look at what's my target. Um, I think a natural target has got to be maybe the next stop is here, 575, 576. That's not far. That's 2 points away. And then probably going to run into the 200 in this area here, and that would be below that. So right now, it doesn't look very promising. This is the spiders. It would be great to rally, but we've now failed this 50 3 days in a row. You fail the 50, good chance you're going to test the 200. So this is the spiders. If we look at the Qs, same story. Broke the 50, couldn't get back above it. How far away is the 200? It's not very far. It would be a surprise if it doesn't go down here. It's at 491, less than 2% away. If we don't bounce and we cut through that as we cut through the 50, boy, has that got me nervous. Hence why I've got a couple of contra positions on. Take a look at the diamonds, and you can see the same pattern. Hard break below the 50, and this was on the 21st, and 4 attempts to break back above it. Eventually, this is going to break down and go down. Now, 418 is only 14, so it's 3.5 points away, 3.5%. So that may be where we have to go for this market to give a good bounce. And then the weakest of everything has clearly been the Russell. And the Russell shows you what you don't want to see on the other major indices. A break below the 200, a failure, and heading down. Now, where is this going to go? Probably need to pull in more data and start to wonder is, somewhere in this range, a target, 205, so another 3 or 4% there. So the markets all look like they're going lower. Of course, they could reverse on a dime if the PCE on Friday comes in softer than expected. Now, we've been looking for volatility to take off. And did it take off enough on Thursday to say we're done? And let me go back to this thing. It had a big move. It was up 10.7%. We're now getting an area, we're going back into the beginning of this year. This is where every pullback reversed. So put that in the potentially good category. I would no longer say the VIX is low. The question is, will we have a sharp sell-off to open the market on Monday after we sell off on Sunday, and that will trigger a reversal in the VIX. I just don't know what the impetus will be on Friday for a major market move up unless that PCE comes in favorable, and that's not been the pattern of late. And lastly, the dollar, which has been down near recent lows, actually moved up considerably, up 0.62, and whether that's positioning before we go into the PCE print, but we're continuing to hear the stories of tariffs, tax cuts, inflation, less or more, depending on the day. Fed cuts, not hearing much about hikes. But you can see the dollar is certainly not at its high. It's well off of its highs. If I go flip to commodities, load. All right, let's take a look at this. Gold. Gold doesn't look so good today, does it? I mean, gold is still, compared to everything else, gold is still holding well. But gold broke down below the 17, was down 1.48%. Is it horrible? No, it's still pretty healthy. The question is, will it recover quickly or is it going to come back and test the 50? So gold has been leading, pulled back a little bit in the markets on Thursday. Silver also pulled back, doesn't look nearly as healthy, down 1.87 or 1.67. Let's look at oil. Oil bouncing around the 200. It was actually up with a gap, 1.59%. Natural gas kind of consolidating, giving us a nice flag here. That, put that in the chart. So we'll see if it executes and takes out that flag. 10-year was up a tad. Actually, be careful. That's the 27th. That is today. Perfect. I want to make sure I'm not looking at tomorrow. So it was up 0.77. The 30-year was up 0.25. So higher dollar, higher 10-year, higher 30-year. Probably no surprise that the market sold off. Let's look at the buckets to give me a sense of what I call left shift or oversold, right shift overbought, and most importantly, the number of stocks above or below the Bollinger Bands. So you can see here in white, 19% of the NYSE is below their Bollinger Bands, 18% of the S&P 1500, 21% of the NASDAQ, and 23% of the Russell. You notice this gray bar here on each of these. That's where it was one day ago. So you could see the market shifted more and more stocks to a bearish posture and more of the stocks below the Bollinger Band. The market breadth tool, let's see if it's going to give us a bingo tonight. A bingo is a baby out with the bathwater signal. Typically, you'll start to see these before the markets roll or stop their fall. Didn't see one here. Did see it in Sagar's tool, but basically you can see the health here of the NYSE versus the NASDAQ. The NASDAQ just looks like it's on a mission to that 200. Here is stocks above the 17 in green, 50 in white, and 200 in red. This is what it looks like when we get to a bottom. We're not there yet. Now we're a little bit closer, however, on the NASDAQ. Now let's look at the individual performance. So we're going to go into the daily brief. So there's really 4 or 5 pieces here. So let's start up here in the upper left-hand corner. So I like to come in, I like to rank on one-day performance. VIX was up the biggest, 5.6%. Diamonds were down the least, and you can see the Qs really took it down the most, but frankly, they're all weak. When I look over here, this is the worst part of the slide. They all closed at their lows, except for the VIX, which closed just off of its highs. Over here is the new high, new lows net, and you can see at all the time frames, they're negative, and the numbers are starting to get higher. Over here is a brilliant approach that my buddy Sagar Nandi did for the S&P 1500, and I wanted to go beyond that. And what you see in the color chart, color bar, is the percentage of sectors in the S&P 1500 that were up. It was 18%. And you can see in gray it's lower than yesterday. The percentage of industry is 27, lower. Advances, 33%. Means most stocks in the S&P 1500 were down. And then how many are above the midline? In a bullish market, you'll be at 60, 70, 80% above the midline, and it's 30. You can see the numbers for the NASDAQ and the NYSE, and sometimes they don't all look the same. There could be discordance. But on the NASDAQ, only 27% of stocks were up. In the NYSE, it was 30. So that was a globally weak day in the U.S. stock markets. If we look at what was moving, we look at one day open, staples, real estate, and then financials. Staples and real estate are definitely defensive plays. Maybe utilities took a hurt because the rates actually went up. So we're seeing a very defensive posture in the U.S. markets. And down here you see them ranked by one-day change. Let me make sure it's right. Actually, yeah, that's what I want. You could see that not many things in my themes list, social media and cannabis, were the only things that were up. And you can rank it by the opposite. And what went down the most: semiconductors, uranium, blockchain, solar, artificial intelligence, software, robotics, telemedicine. And boy, these have all been recent leaders. That's pretty impressive to see how hard they have fallen. So now, we've formed some sense of what the market's doing. And I'm just going to, lastly, I want to look at the ratio charts, and then I'm going to go and look at a bottoms up approach and then a top down, and then say goodnight. So I'm looking for what's up the highest in the upper right-hand corner. No question, staples strong, real estate strong, utilities are strong, communications has held up while discretionary is in the toilet, technology's in the toilet. So this is clearly a shift to a more defensive posture. Now, the JAS layout view is where the music plays. So this chart is set up to match what I do in multiple different platforms. I trade one way. There are pros and cons to each of the platforms I use, which I talk about when I do my seminars. And then people ask me, well, which is my favorite approach? And then I ask you to tell me which is your favorite child or grandchild. There's a lot of good tools out there. I use them. I do videos with them, whether it's HGSI, Wealth Charts, TradeStation, TradingView, and soon to be I'll have my tools in Metastock and this app that I'm demonstrating for you today. So I work off of a list called the JAS list. It's made up of the NYSE and the NASDAQ, filtered for $1 and 100,000 shares. In a strong market, I'll have 3,700 stocks. This is a weak market. I've got 3,461, and we update it over the weekend because some of the stocks will fall out on volume and price. I look at top down to get an understanding of what's going on in the market. So top down, I can rank by percentage change, which is a good way to look at it. And I could see that real estate and financials from a percentage move were the big leaders in the market on my stocks that I have selected for. If I click on real estate, I have 194 stocks. If I want to look at one-day performance, I can see medical properties, MPW, had a great session. Let that pop up. And we could see kind of a sideways move, big move, probably on earnings. I click this here, I hover, it shows. So earnings are out and they were negative. Interesting. Yet the stock rallied. PE is 12, no big deal. And I guess it doesn't pay a dividend. Not that exciting to me. PSTL, let's get Postal. Postal Realty Trust, I don't love the pattern. SVC, again, too low in the pattern. And this is one of the dangers, or not dangers, realities when there's big market rotation and the laggards come up to the top. You're not going to find necessarily within the laggards great looking position. So I'm just running down the charts and seeing if anything in real estate actually looks interesting. Now this looks better than most because it's pulled back after an uptrend. It's not in pure chop. and you could see it had a gap, breakout momentum. You could see strength in relative strength in OBV. Let's look at a few more. I'm not a bottom fisher, but you could argue that this is a higher bottom. Let's put the line in. All right, let's try that again. Let's click on the line. There we go. Let's click here. I mean, yeah, there's a double bottom there. Now that's actually interesting. It had, look at all these days of high volume coming in. You could see that here. You had a breakout yesterday on Wednesday. You have momentum today, relative strength in OBV. Again, not my typical stock. Curious as to what it pays for a dividend. And you can see it's an IPO. It pays a dividend of 90 cents a year on 59 bucks. Not a very big dividend. Certainly wouldn't be buying it for the dividend there. So one way is to go through them. Another way might, let's look who's got the most ups. And you can see many of these have the most up dots. And I like sometimes to look at 2-day momentum. And so I will rank them by 2-day momentum and see what comes to the top. There's Postal. It's what I said probably look okay, but I don't like just the pattern. Um, American Tower, AMT, nah. Invitation Homes, nah. And here's that line again. I'm not a bottom chaser, but there's a double bottom there. That might be interesting. MAA Apartments, it looks different, doesn't it? We just took out this high. Now we closed below, so I might want to put a buy stop above if I was trading it. But uptrend, clear pullback, and probably, let's just draw an arrow line here, through there. We're breaking out of that trend line. This one does look interesting. I only had one dot, which was a volume dot. All right, so I might add that to a watch list. AMH, American Homes, not right now. SBAC, Construction, yeah. CPT, is this Camden Property Trust? This is another one that looks interesting, and I know this one pays a dividend. So earnings are out, and their dividend is 3.58%. So one way is just to pick your favorite sector and go down it. Another way is to look at, see, I gotta reset that. Go out of this for a second. Okay, I got that reset. And we looked over here on the sectors. Over here, I have the industry groups and how many of these industry groups were up versus down. And you could see there's a handful that were up, but the majority of them are down. And I can look at, let's do 2-day or short-term momentum. And we could look at the top 5, 1, 2, 3, 4, 5, and let's rank it by short-term momentum again. And what comes to the top is Root, which had great earnings and a breakout. HEI, industrials pullback, breaking out above the 200. That's interesting looking. Look at the volume. Look at the relative strength in OBV. It's not extended. So we had an EMS, a CPR, a gap, volume, breakout, momentum. This looks great. That might be the one I like the most so far. All right, VSEC also looks great. Clearly, that's an easy one to see that you had pretty significant. I don't want that there, so hold on a sec. Get that line. So we broke out of that flag Lots of dots. This one also looks very good. I suspect earnings came out 226. So yesterday, um, not much of a dividend. Had growth compared to the quarter a year ago. So this is 90 cents versus 85 cents. So 5.85% growth. Revenue grew 27%. There were surprises on both. No surprise that this thing went up in the market on Thursday on a bad session. So like ERJ, regional jets, boy, they've been on fire. TTG kind of going sideways. So again, top down versus bottoms up. Top down is I identify the top industry groups or sectors. I might look at the top sector and look at the industry group in the top sector. And then I will build my watch list by looking at the top sectors, looking at the top industry groups, the top sectors, or just looking broader at the top industry groups. Now, I like to do bottoms up too. See, I can't help myself. So, what I'll do for bottoms up is I might go into my scanning tool and say, I would like stocks that have price over 5, volume over 500 with a 2-day momentum signal. This is one of my go-to signals. Just look at these two stocks. ATEK, I love it. Uptrend, pull back to the 50, free parking, and a breakout on Thursday. Now, don't know why the gap dot is red. It doesn't make sense. It's an open candle, which tells me it opened and then it closed up at the top. So that should not be red for the gap. So that's a pretty good looking chart. Yeah, it's had a V bottom and it's coming off of a V bottom, but I really like what I see over here. Pull back to the 50 and a breakout. And then ZK, not there yet, but one that's also setting up. And what I'm really looking for is how many stocks have these two blue dots. And in my experience, those two blue dots, or if I'm bearish, see if there's anything left with 2 days, two momentum days down. Let me kill the up. And I've got, let's just look at some of these from a shorting perspective. So I found the stock that broke down below the 200 and MFC here, failed at the 200. Pretty big move in the market, starting to get too much extended to the downside. PRKS, Parks, breakdown here. Stella, despite falling a long ways, they're able to break down again with their earnings that came out. Nope, no earnings yet. So I can use my scanner to look for longs, shorts, and then one of my other favorite scans, which requires a buy signal on the short term and a weekly buy in the same direction or sell both ways. Let me kill the 2 days down. And this is another one of my favorite lists. Let's just rank them by FM2. Just HEI, I think we looked at this one earlier and liked it. Let's see. Yep, HEI I like a lot. EBTC, breaking out. MEG, I like the pattern. I don't like it below the 200. ARIS, like this a lot. Up, sideways, and a breakout. Urban Outfitters, big move up, pull back, and a breakout above the 50. Look at this down here, the big volume, the CPR, the rest of my four dots coming out of a squeeze with great relative strength in OBB. So what I wanted to show you was, again, how I use the tools of top-down analysis. I've created this tool for a simple reason. I want to knock off my nightly work in 20 minutes. Well, it took 30 today because I talked too much. But I've created a workflow solution that allows you to understand what's going on in the market at any given time during the day using the daily brief. And then those who have watched me for years know that I've combined what I've learned from Ian and others to a number of market timing signals, of which are incorporated in this program. help you figure out which is the best sector and industry group to be looking at once you determine your direction for long or short, and then take it down one more step and find the best stocks, either from a bottoms up or a top down perspective. Let's see what the PCE is on Friday. Will we get a rally, or are we going to close the week with all my weekly timing models saying no buy, no buy?